Everybody, it's Brian Shannon from AlphaTrends.net. Today is Friday. It's the 29th of January, last day of the month, and we ended negative here. First up, I want to say thanks to our new sponsor, which is the FNGU and FNGD. These are leveraged FANG stocks. So if you trade the FANG stocks, you might want to look at those for leverage in that group. But let's take a look at the numbers here. The S&P 500 for the week lost 3%, as did the NASDAQ. The Russell 2000 did a little bit worse, but still up for the year. And just a volatile market. Obviously, we had some catalyst here this week, and things got a little overheated to the upside, and now we're seeing a cooling off period. So let's take a look at those charts. The S&P 500 came down precisely to the volume weighted average price from that November gap. That's a volume weighted average price I've been pointing it out for the last several months here, as it has been important, and it did become once again. And that's where we see, of course, we also have that rising 50-day moving average. So going into next week, I think we got a little bit oversold here the last 4 days. And, it doesn't mean buy right here, because we are below a declining 5-day moving average. And as you know, I like to look at the market as guilty till proven innocent on the intermediate term while we're below that declining 5-day moving average. So we got a decent bounce from that volume weighted average price, but it certainly wasn't, straight up from there. Heading into next week, we want to continue to see this level hold. If not, then I think a test of the volume weighted average price from the November low is our next likely area that will be tested. And you can see that's had some prior significance as well. Back to the daily time frame. Again, we're still in a primary uptrend when we look at the daily and of course the weekly time frames, but maybe we just need a little bit of cooling off after, again, the speculation got a little bit too high, and you could argue that it became a little bit too easy to make money on the long side. So now it's time to play a strong defense. I'm always asked by subscribers and people on Twitter and that, what are you looking for in terms of a top? And the answer is always the same. I'm not looking for a top. Instead, I will recognize signs of topping process and let the market tell me from there. So right now, what do we see? Well, the NASDAQ also pulled back this week. It got stuck below its year-to-date volume-weighted average price. And let me go back to the SPY for a moment, because if we get a bounce next week, I think that's a likely area you want to keep an eye on as potential resistance. We had seen it prior acting as support, and then as the market kind of went back and forth above and below it, it represented indecision. Now we'll see if that's a level that the sellers do in fact defend. But back to the NASDAQ. We're below a declining 5-day moving average. So what happens during this type of activity? Well, you start getting stopped out of your long trades. That's what happened for myself and subscribers to Alpha Trends. It's a swing trade service, so we get stopped out, a couple days ago, and then we weren't seeing good quality setups, and that tells us, hey, the good quality setups aren't there. Let's wait for the market to give us a better indication that it's a low risk, high probability time. And right now, below a declining 5-day moving average, it's not that time. So I simply wait for the market to tell me. I'm not, the best short seller out there, so I prefer to look for long trades. Occasionally, I'll trade these, levered ETFs for bearish exposure. I think that's probably the best way instead of individual stocks. I just can't seem to make very good money ever shorting individual stocks. Some people are great at it, not me. Know your strengths, know your weaknesses. The Russell 2000 came down below a pretty important level. This is what I've been telling subscribers this week. We wanted to see it hold at this level, this 208 area, and of course that's the year-to-date volume-weighted average price, which had been offering buyers support. Now with it below the declining 5-day moving average, and we probably want to start to put a volume-weighted average price off these peaks here as well. So if we look at the Russell 2000, if we see a rally, it's likely that, maybe we get up through this level, come back down, and then something like this. I'm not calling for this to happen, but it's certainly a possibility for next week, something to be aware of. You don't want it, the point is you don't want to get too aggressively long while it's below declining 5-day moving average and the volume weighted average price from that peak. Also, the year-to-date volume weighted average price is just starting to turn lower. So sellers are gaining control, and if they continue lower, I think it's a high probability that this is our next level. basically right at 200, and that's certainly a possibility. So be aware of these possibilities of where the market has the potential to go. Semiconductors got rocked pretty good. We saw that they lost their volume weighted average price from the beginning of the year, and then the market bounced up to that level and found supply. So that's not a good look for the semiconductors, and it seems highly likely to me that we'll be able to continue lower down towards about 220 as our next important level of potential support. That's the volume weighted average price off of that November gap, or I'm sorry, that November peak, and it's also right about that 50-day moving average and prior resistance. The Biotechs, as I had mentioned to subscribers, we had gotten stopped out this week as it broke below this level. So it made a lower low below a declining 5-day moving average, and it was a nice trade. Now we're done with it. Let's let them settle back down and see if maybe they're going to find buyers at this 50-day move, or I'm sorry, this 20-day moving average. But I'm not going to be the first one to go in there and buy. My ego doesn't say I have to buy at the low. It is interesting that this is also, of course, the year-to-date volume weighted average price. And some of the stocks that I'll be looking at next week. By the way, hopefully some of you got involved in shares of BYND. I was on Yahoo Finance last Friday right here. The stock was 138. I had mentioned that I liked it because the 50-day moving average was just starting to turn higher once again. And now we see that, on Monday, we saw a nice open and then a huge gap over here on Wednesday, which was the perfect opportunity to sell. That's what I did. And also I had warned in that video about Tesla, if we see that earnings become, something to get sold into, that we would likely lose this year-to-date volume weighted average price. And I think the danger in Tesla now is that if you start to see this 5-day moving average and this year-to-date volume weighted average price offers supply, well, I think that you're going to see a test of the volume weighted average price from the November low. I know that people love Tesla and they don't want to hear anything negative about it. I'm not being negative. I'm saying be defensive, be smart, maybe lighten up a little bit if that's your game, and look to purchase lower. It's called trading. I'm a trader. That's what I do. I'll be looking at Microsoft next week. It was a nice breakout here, and it's still it's in pullback mode. I don't expect to be a buyer right away on this stock next week, but if it's to do something like this, where it comes down maybe towards that year-to-date volume weighted average price on Monday or Tuesday, and then we start to see something like this develop where the 5-day moving average starts to come down and flatten out. It gets back above that 5-day moving average, and of course we'll probably see the volume weighted average price. So let's start it like this. The volume weighted average price off of this peak will also start to decline and come down similar to this. And then what I would want to do is buy a higher high above a flat to rising 5-day moving average, as long as it's not too short-term extended, and then put a stop perhaps even underneath the year-to-date volume weighted average price. Microsoft certainly looks like it has the ability to be able to continue from this breakout. The danger, of course, is that it continues to pull back, and this is a false breakout that ends up failing. So that's why I'm not going to be a buyer of a dip. I wait for the dip to discontinue, to diminish rather, and then see the buyers start to slowly absorb and regain control. If they regain control and the stock turns back higher, then I would want to get involved. I wouldn't want to get involved up here in a breakout because I'm giving up all that advantage right there. I might even sell some on a breakout if that's to occur. Anyways, that's one stock I have an eye on. If you really want to know how I trade these stocks and suggest doing them, take a subscription to alphatrends.net, take 2 weeks trial. We're also looking at Lufax, a recent IPO. You can see the volume weighted average price from the IPO held today and yesterday as it pulled back, and the volume weighted average price off this peak, it got back above today. Now, similar thing, do I want to just buy right here like this? This is what I was showing for subscribers, that we were anticipating a potential turn for this stock, but the evidence isn't there yet. So this is one that we'll have an eye on. I'm also going to have an eye on Overstock. This one has been a real piece of garbage for a while, but it finally got back above the volume weighted average price from this peak, and we also see a rising 50-day moving average. So what's starting to look like a bullish flag right here. We saw high volume on the break higher, lighter volume as it's consolidating. Now that tells us what do we want to do? We want to look at a shorter term time frame for evidence that the buyers are in fact gaining control. So we see the 5-day moving average is advancing. We've got an advancing year-to-date volume weighted average price. When I look at the volume weighted average price from this gap and from this high, it tells us that we're still a little bit early in here. So very similar to what I sketched in with Microsoft. Let me do something similar here and show you the type of way that I would be looking to get involved if I get involved in this stock. And again, let's just put those volume weighted average price levels back on. And this is a potential scenario. One, hey, maybe it just continues to pull back and it fails. That's fine. It can do that. I don't care. I don't have a position in it. But instead, if it does something like this, then I would want to be a buyer on strength right here. And then a worst case stop would go below this low, assuming that low isn't undercut. Anyways, that's just an idea. Again, I will be monitoring these and updating them as I do every single day for subscribers to alphatrends.net. Have yourself a nice weekend.